This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at key events for investors and traders. Stocks broke out to new highs last week, led by technology and cyclicals like financials and cruise ships. The S&P 500 rose 1.1% between Friday, October 4th and Friday, October 11th. It was the fifth straight positive week. The index also closed above 5,800 for the first time, less than a month after crossing 5,700. No single catalyst clearly explained the move. Instead, there seemed to be a general trickle of money into equities as investors began the fourth quarter with cash to deploy. Economic events were important, but mostly unsurprising. Minutes from the last Federal Reserve meeting revealed some officials would have supported a smaller rate cut in September. Policymaker Raphael Bostic hinted the central bank may not ease next meeting. However, yields had already risen, and the news had little impact. Inflation readings were largely in line. The consumer price index was 1/10 of a percentage point higher than expected, but the key shelter component slowed sharply. That could suggest structural inflation continues to diminish. The producer price index was lower than forecast. Moves at the individual company level appeared more noteworthy. Supermicro jumped on news. It had deployed more than 100,000 GPUs with its liquid cooling solutions. The news lifted an AI stock that struggled after more than tripling in the first quarter. Uber Technologies rallied after Tesla unveiled robo-taxis that failed to impress investors. That relieved worries that Uber will face competition in the ride-sharing market. Tesla dropped in response, making it the worst-performing member of the S&P 500 last week. Elon Musk's electric vehicle maker also fell back into negative territory on a year-to-date basis, according to TradeStation data. Cruise ship operators rallied after Citi saw potential for higher earnings and multiples. The firm hiked its price target by 50% on Norwegian Cruise Line. As a cyclical industry with relatively high debt loads, will cruise ship operators benefit from a stronger economy and lower interest rates? Carnival was another big mover in the group. Cybersecurity stocks like Palo Alto Networks climbed as money rotated back into software companies. It marked a potential shift after tech investors spent most of the year focused on semiconductor names, like Nvidia. Industrial suppliers rallied after Fastenal beat estimates on strong unit volumes that spurred hopes of a manufacturing rebound, despite consistently negative readings from the Institute for Supply Management. Fastenal had its biggest weekly gain since early 2020, and rival Grainger shot to a record high. Technology rose the most last week overall. Industrials, financials, and healthcare also outperformed. Utilities and consumer discretionaries fared the worst. Earnings season got off to a positive start after JP Morgan Chase and Wells Fargo beat estimates. They benefited from wider interest margins and increased lending. The KBW Bank Index jumped to its highest level in 2.5 years. Could investors see more opportunities in financials, with the economy apparently skirting recession? The yield curve is also no longer inverted. Both of those factors may support the group. Banks and financials are likely to remain in focus this week, as companies like Bank of America, Citi, Goldman Sachs, and American Express issue results. Retail sales on Thursday could be another catalyst, because they'll show the strength of consumer spending. We'll get to more key events in a little bit. Speaking of earnings, Bank of America said equities could advance because investors are too pessimistic about results. A separate report from FactSet estimated that profits will probably increase by 7% this reporting season. It added that consensus Wall Street numbers see growth accelerating into double digits the next 3 quarters. And now let's chart the market. The S&P 500 began last week with a decline slightly below 5,700. It then proceeded higher, resulting in a slightly higher weekly low above July's peak that suggests new support has been established above old resistance. The index also stayed above its rising 21-day exponential moving average, and the 9-day rate of change turned positive after a slight drop. Those signals are potentially consistent with a short-term uptrend. Other points may confirm the market's broader strength. For example, TradeStation data showed a jump in the number of S&P 500 companies, hitting new 52-week highs. The total more than tripled on Friday to 66, the highest reading in almost a month. CBO's volatility index, Core VIX also retreated from the area around 23 to 24, where it peaked in early September. Further declines from here could also potentially support risk appetite. We'll now turn to the week ahead, which sees earnings get more active. Results are due from at least 40 members of the S&P 500. Nothing important is scheduled for today, and some items are pushed later in the week because of the federal holiday. Tuesday morning features quarterly numbers from Bank of America, Citi, Goldman Sachs, Johnson & Johnson, and United Health. Wednesday brings earnings from Morgan Stanley. Thursday's the busiest session, with retail sales and initial jobless claims in the pre-market. Crude oil inventories are later in the morning, one session later than usual. NAHB's housing market index is also due. Netflix issues results in the afternoon. Housing starts and building permits are on Friday, along with earnings from American Express, Procter & Gamble, and Schlumberger. Thanks for watching. Please visit tradestation.com for more.